Hello guys, just want to come on here and give a review of the trading week. First, start with the economic calendar. We had news on Monday, Tuesday, and Thursday and Friday. So first we'll start with Monday. We had 8 o'clock news. We'll start with the weekly candle, because that's how I start every week. I look at the economic calendar and the weekly chart to predict the weekly expansion. So before this week had closed, I was looking at this volume imbalance here on the weekly chart, and previous week high and previous week low. So Monday at 8 o'clock, we ran this hourly buy side. Let me go to Monday. We ran this hourly buy side at 9:30, and since it was 8 o'clock and not 8:30, it's still a tradable day, but since there was no 8:30 embargo, I'm not interested in pre-market, so I'm going to wait for equities open. And then you can notice midnight is way down here, so we're in a premium, which gives me even more confidence to take these shorts. And at 9:45, 9:50 macro, make a displacement leg short here. Now you can enter here, stop at the candle 1. That's a 1R. You can take a partial there, but I'm looking what's beyond that, and I see that imbalance. But ultimately, I see, if you go back to an hourly chart, it is this hourly sell side here. So you enter at this fair value gap since it's at 50%, and then the model is 3 candles, so there's 1, 2, 3, and your stop has to go above the first candle of the fair value gap, and then you can target that hourly sell side for 2R. Me personally, I took the next entry here, which is also viable, 10 o'clock. And what did I do? Entered here, stop above the high, and then I think I targeted a 2R in this M5 imbalance. So that was my trade on Monday. We had 2 opportunities to get short above midnight open, which is high confluence to take this trade. Another little gem here is the first fair value gap after 10 o'clock. You extend that in time because it's used as support and resistance for the rest of the week, and I'll show you what I mean here. So on Monday, the short I took, that was 10 o'clock. If you take that fair value gap and extend that in time over the week, you can see here on Tuesday early in the morning session how we raid this high, and then we tap that as resistance, and then we sell off. So you can use this first 10 o'clock fair value gap extended in time and use that as support and resistance levels. And as you can see on Thursday, we come back to it once again, and we keep using these levels. And I'd only recommend using in the past couple of days for this, or whatever, where we're at in price. That's how I would use it. So I'll keep that on my chart for now, but then I'll go back to the economic calendar and I'll look at, okay, well, we have Tuesday. We had 10 o'clock news, so I'm not interested in pre-market. I'm going to be interested in equities open, and I'm not going to be really too interested in 9:30. I'm going to be waiting for that Judas swing and 10 o'clock news to hit. So Tuesday being said, same thing, midnight open. I'm asking myself at 9:30 what's happening. At 9:30, get me rid of my executions so it's clear to see. At 9:30, we sweep this low. You can see the manipulation by the massive wick. These big funds are running this in the market below this sell side to grab all that liquidity. The wicks do the damage, the bodies tell the story. So while everyone's going short here, big money is buying all your orders here to distribute long, and that's what you can see here. We have this big wick, and then throughout the rest of the week we had this big distribution. So at 9:45, 9:50 macro, we make another model long. Fair value gap is at 50%, and since it's a big fair value gap, I can put my stop at this candle. I don't need this candle down here because this order block should not, like, we shouldn't come down here at all. So what it would look like, you enter here, stop here, and notice how we used yesterday's 10 o'clock fair value gap as a confluence and a support level to go long. And then you can target last week's previous week high, and that would give you your 2R there. And I couldn't capture this on my funded account because it hit it overnight, but the model still works and the logic is the same. So that was Tuesday's trade, but like I said, the 10 o'clock candle, I'm gonna draw that out in time. Our first imbalance after 10 o'clock was right here, so I'll just draw that out in time. So Wednesday we had no news, but I'll still use the 10 o'clock first imbalance at 10 o'clock as a resistance level. I'll draw that out in time. So that's all I'm really taking from Wednesday's trade. And let's go see what Wednesday does. So Wednesday, despite not having any news, we swept a previous week high, refusing to go up into that imbalance, and then that will take us into Thursday, Friday, where we had most of our expansion and our high impact news, and I'll show you how that correlates. So on Thursday at 8 o'clock, we had our high impact news. We swept this London session high above midnight, so in premium. So all these things show me like they don't want to take this market higher. They want to manipulate price higher and then distribute it lower. So we'll go to Thursday. Here's my midnight open. Let me draw it like this. And Thursday, since we have that 8:30 news, I am interested in pre-market. So I'll draw my New York open. New York open is 8:30 candle open when there's 8:30 news. That's the only time I'm really interested in using the opening price at 8:30. So at 8:30 we open, and then we sweep another M5 high above that hourly high, and then we start displacing lower as we get into the the 850 910 macro. We get a short here, fair value gap. You can short here, stop above the candle 1, target this hourly chart. It's this hourly sell side, I think. Yep. You can target that sell side. Notice how we go to yesterday's 10 o'clock fair value gap and we trade through it and we displace through it, and then we take all this liquidity out, and then ultimately we print all the way back down to, you know, Monday and Tuesday's 10 o'clock fair value gap. So just a little gem on how you can use these levels as like real support and resistance. So that was Thursday's trade, and I'll do the same thing. I'll look for a 10 o'clock, the first 10 o'clock fair value gap, which is right here, and I'll draw that out in time. 10. And then the last trade of the week, yesterday, we had PPI 8:30 news. So again, I start every single day that has an economic calendar day with midnight open. That tells me, are we in premium or are we in discount relative to price action? So at this point, Wednesday manipulated above this daily high. Thursday had a very bearish day, and we made these imbalances on the H1. So at this point, my bias is short, and I'm looking for only shorts. And I'll show you how I capitalize that on Friday. So leading into 8:30 before we opened, I'm noticing on the M15 we hit that hourly, and on the M15 we are bearish. We have a bearish change in the state of delivery here, bearish imbalance, then another change in the state of delivery, and so on and so forth. So I'm constantly asking myself, what is the algorithm doing right now, and where are we? And then I'll drop down to my entry time frame. We had 8:30 news, so I am interested in pre-market. So we're below midnight. That shows me, well, we're in a discount, but my higher time frame, I'm still short because we manipulated above that high. We have all these weekly and daily sell sides lower. Well, we can still short in a premium, a discount, because of 8:30 open, and that's where the 8:30 open comes in, and I'll show you how to use that. So at 8:30 we displace lower and we leave New York open just like that. And just for clarity's sake, I'll explain this fair value gap first. So notice how we use the previous day's 10 o'clock fair value gap, and we're kind of displacing through that. So that already tells me we have a short bias. So I'll get rid of these so I can clear up the space. But at 8:30 news, we displace lower and we make a model short. So I can draw my fib from that high to that low. You can short 50%, which I usually do, but now that I'm kind of refining my model, I want to take the best possible entry and the deepest premium when I'm going short. That way, like, okay, because before I'd used to short the 50% and I'd put my stop about like right here above the candle 2 of this fair value gap, and then I'd always get stopped out here. But now I want to enter in the deepest one and then put my stop like at the closest to a swing high structurally. So that's why I added the 0.62 and the 0.79 to tell me, like, okay, if 50% is available, is there a fair value gap at 0.62 or 0.79 that I should consider? Then I'll consider it. And that was my mistake yesterday, was I took the lower one and I got stopped out, which I was fine with, but that's what made me refine this even more and how I could improve. I noticed we were below midnight and we were in a discount, so I didn't really want to short, so I shorted the lower fair value gap and I got stopped out. But what you can do is, since we're trading in a discount and we're trading below 830 open, even to a deeper discount, I'm going to take the deepest premium entry, which gives me the 0.79 fib. Put your stop at the high, and you get filled at 930. And then, you know, you can target the edge of the leg. That's OTE in its simplest form. So that was Friday's trade, but I'll show you what I did. I took the lower fair value gap, put my stop here, and put my stop at the high. And then I'll show you what I was looking at on a higher time frame. I was looking at, I think it was this daily sell side here. Yeah. So my trade looked like this when I set it up. I took the lower one. You can do that. That's part of the model. You can take the 50% fair value gap. But me personally, since I like controlling things, I like being able to control what I can control. So I'll take the most premium entry because that's in my control. I can control taking a fair value gap above 50% if there's two. I'm in control of that. I'm fine with missing a trade if, you know, I can get a higher risk to reward. And yeah. So just a quick couple refinements I made in how you could approach this week. And now I'm going to shift into next week, how you can approach that. So here's the economic calendar. We have news on Monday at 10 o'clock. So I'm going to be interested, you know, I'm going to be at the charts at 9:30. Maybe watch for a Judas swing and then watch 10 o'clock how that releases and how I can capture that. And then Tuesday we won't have news, but I'll note any 10 o'clock fair value gap like I showed you today as support and resistance. And then Wednesday, again, I'll watch pre-market, but I don't think I'll take a trade because it's 8:15. Still back testing if 8:15 counts as an 8:30 release. So Monday and Tuesday do the same thing. I'm probably gonna be at the charts at 9:30, wait for a Judas swing, and then 10 o'clock, boom. And then Thursday, Friday, it is non-farm payroll. So if I get a good trade Monday and Wednesday, then I might consider my week done. I'll stop there. You know, I'll backtest Thursday, Friday, or watch it. But historically, non-farm payroll is a very manipulative event because it's the first week of the month, and the first week of the month means manipulation of the monthly power of 3. So, but if you were to trade Thursday, Friday, I'd probably wait until New York Open on Friday at least. So that's how I'd frame next week and how I'd trade it using this model. But for now, I'll just start with the weekly chart. Like previous week high, previous week low. That's all you need. Every single week, it looks like this. Are you in a range that you can work within on the weekly or daily chart? Then you have a range to work with, and then you use your hourly chart to gauge institutional order flow, bearish or bullish, and then you know you find your model, your entry model, and you take a short and you target low-hanging fruit. And low-hanging fruit on Friday was this edge of the leg M15 low. That's why we didn't run to Monday's low, hence the reason why I am adding the rule of taking the deepest premium fair value gap. So I know that was a lot of information. I just wanted to show you guys that this is repeatable and you can do it yourself, but you have to put in the work and you have to study it. If you don't study it, then how do you know how to interact with the market? And especially if you don't know yourself, how are you going to put money on the line if you don't know how you're going to respond when money's going up and down, fluctuating on a screen. Have you felt what it felt like to see what it's like to lose a couple grand in 30 minutes? Then it takes a whole nother level of being able to handle pressure and knowing yourself on how you handle pressure, on how to engage with the market in the first place. So I'm showing you these things so you can build a model and then you can start studying yourself within it. Without that, then none of this is going to work, no matter what you do. So for right now, I have Friday's 10 o'clock fair value gap, previous week high, previous week low, and I'll draw any level inside that range with 10 o'clock fair value gaps as support and resistance. So within this high and low of the previous week, I'm looking at these 10 o'clock fair value gaps that can help me gauge whether we're more likely to go towards this upper red line or this lower. And I still favor shorts, but you just have to wait and see on how the news reacts and how we displace. So I'll draw Tuesdays too. See how that looks. Okay, I like this a lot better. So I'll get rid of Friday since it overlaps Tuesday and it overlaps Mondays as well, and it's the bigger imbalance, so I'll use that one. So these are the really only real levels I have for now. Notice how we're kind of in the middle of the range, just generating liquidity on each side of the marketplace. That's what the market likes to do until these embargoes hit, and then they counteract all this liquidity, and then they aim for, you know, these higher time frame levels where they want to take the market on a daily and weekly basis. So that's that. Those are my levels going into next week. Monday I'll share Monday morning I'll post my levels, I'll post reels, and I'll try to share my levels and my thoughts on where we're trading at. And until then, good luck and good trading.